What if I told you Ottawa's housing market in 2026 is already being decided right now in fall of 2025? The data is in, sales are shifting, prices are moving, and the forecasts are pointing to a market that could look very different just months from now. In this video, I'm going to break down the latest national predictions, Ottawa's own numbers from the summer, and the three biggest forces that will make or break next year's housing market. Watch this, because by the end, you will know exactly how to play Ottawa's real estate market in 2026. Let's start with the big picture. According to RBC Economics, home resale across Canada are expected to drop by about 3.5% in 2025. But in 2026, they forecast a rebound of nearly 8%. That would bring national resale back to around 504,000 units. That's just shy of pre-pandemic averages. Now, what about prices? RBC is cautious. They expect a small increase in 2025, followed by a slight dip of about 0.7% in 2026. And Ontario and BC are expected to see the sharpest pullbacks because of affordability and high supply. CREA, so Canadian Real Estate Association, is a bit more optimistic. Thankfully, they're projecting a 6.3% increase in sales in 2026. The average price rising about 3%, bringing the national average close to $700,000. Reuters leans more conservative. They poll economics across the board who expect prices to fall 2% this year and only stabilize modestly in 2026. And Global News right here sums it all up in their late August report. 2025 is a slowdown year. 2026 should bring more activity, but price growth, especially in Ontario, will likely remain muted. So across Canada, the story is clear. We're in a dip right now. Next year, activity rebounds back, but prices do not expect fireworks. Now let's zoom into Ottawa more specifically. The Ottawa Real Estate Board released their August 2025 report. And here is the snapshot. 1,236,000 homes sold in August. That's a 12% increase over last year. Year-to-date sales are just under 10,000, up 4% compared to 2024 at this time. All positive news. The average sale price in August was $686,536. That's a 3.6% higher than this time last year. Active listing reached 3,971. That's 37% above the 5-year August average. Townhomes are the clear winner, up more than 8% in price compared to this time last year. Single-family homes holding steady at around 1.5% growth. Condos, well, they are slipping, down about 1% year over year. The overall market sits in a balanced position. 3.2 months of inventory and a sales to new listing ratio of 58%. So Ottawa heading into the fall 2025 is balanced with healthy townhome demand, steady detached sales, and condo weakness. So what does this mean for the year ahead? Here's how I see 2026 unfolding in Ottawa. Sales should rebound modestly, in line with national projections. We could see 4 to 6% more transactions in 2026 than this year. Prices will move differently by segment. Townhomes will likely keep leading the way. They're affordable, they're practical, and in demand by both families and downsizers. Expect another 5 to 7% increase growth in the townhome segment. When taking a look at single-family homes, they will likely post smaller gains. Around 1 to 3% feels realistic, enough to keep pace with inflation and steady demand. And condos, this is where the weakness remains. With pre-construction projects stalling and resale condos already down, we could see flat to slightly negative growth as we lead into the 2026 year. Overall, Ottawa should remain balanced. It's not like the selling frenzy in the COVID days of 2021, but not a collapse either. Steady, moderate growth. What drives this outlook? Well, really three things. Number one, interest rates. If the Bank of Canada eases further into 2026, borrowing power improves. Buyers re-enter the market, but if rates remain sticky, affordable stays capped. Number 2, pre-construction weakness. Across Ontario, pre-construction sales are at a 30-year low. In Ottawa, that means fewer condo projects moving forward, which means less future supply. That will squeeze the condo market in both directions, hurting resale demand and limiting few options tomorrow. And number 3, economic stability. Ottawa is cushioned by its federal employment base. That tends to smooth out the ups and downs compared to, say, Toronto or Vancouver. But Ontario has already seen job losses this year. If that deepens into 2026, Ottawa will not be immune. So what does this mean for you? If you're a buyer in fall of 2025, the early 2026 offer opportunity. Inventory is higher, competition is calmer, and if the rates ease, affordability will improve. If you're a seller, price with the market. Townhomes will move quickly. Single-family homes should sell steadily, and condos may take longer. And pricing aggressively could be the difference between selling or just sitting and not moving at all. For investors, townhomes look like a safer bet. Condos are risky unless you can get a smoking deal, and pre-construction is high risk because what you buy today and the price when you take possession in 18 months might be two different things, and you're locked in at today's prices. So if prices come down, you're going to have to come up with the difference. Now let's talk about the risk and opportunity. On the risk side, mortgage renewals. Many households are coming off of pandemic era low rates. By 2026, renewals will set higher, squeezing budgets. Another risk is immigration. If the federal government slows intake, housing demand across the country, including Ottawa, could ease. And the job market. If federal hiring slows, it could ripple through the local market. On the opportunity side, if rates come down as expected, Ottawa could see stronger affordability and lift in demand. And the pre-construction stalled. Resale supply will remain valuable. That should help townhomes and single-family homes hold their value even more. And finally, missing middle housing, triplex, fourplex, and infill development. They're Ottawa's best chances to boost supply and quickly meet the demand for Ottawa. So here's the bottom line as we head into the fall of 2025 and the outlook for 2026. Ottawa's market is balanced. Townhomes are strong. Single-family homes are steady. Condos are soft. Next year, sale prices rise by around 4 to 6%. Prices overall should edge up 1 to 3%. Townhomes may grow even more. Condos remain flat, no boom, but certainly no bust. Just steady growth in Canada's most stable market. But the bigger question is, what does this mean for you if you're thinking about making a move? Should you buy now while prices are stable and interest rates may still shift, or wait to see how the market plays out? In my next video right here, I take a deep dive into the pros and cons of both options, backed by the latest data and trends. Be sure to check it out.